All right, so just gonna quickly go over this week or yesterday, today. I mean, um, today was the 12th. Let's see. We had some news coming out. Nothing insane. No red news today. So just trending from the night before. We saw price just rallied up. So I'm bullish. Me personally, I'm also trading gold, silver as well, incorporating silver because you'll see it's so easy to read. Like it's so easy to read. So going into today, I did expect to sweep liquidity here. We had a bunch of sell side liquidity down here, and I was expecting us to sweep um to at least sweep this like, but we didn't. Once we saw market open 9:30, we just saw price strong push up, strong push up. Let me close this. But this is a candlestick. Actually, I'll keep it. Strong push up, and honestly, I was a little confused, but I waited for a pullback because I was a tiny bit bearish here. I was a tiny bit bearish. I didn't want to see price. I didn't. I I was bearish until I saw this push up, because I did expect price to get down here. So I was bearish for both gold and silver. So I wanted to see price sweep liquidity. You can see here I had this, and I had an alert down here because I did expect price to get down there. That was the highest probability setup in my opinion. However, we didn't see price push down, and we saw price instantly push up. So for gold, for me, I wasn't entering here. I'm not gonna enter here. However, I would have entered on this Fibonacci. Once I see the strong push up, could have entered right here. A little bit of a low risk reward, but it is a pretty guaranteed trade considering price pushed strongly up already. Could have entered amidst this candlestick, but it's a pretty good entry. Um, then another entry right here. Price pushes up again. Boom, boom. Price starts retracing. We already hit TP here. Retracing. Comes back to the 50 and 100, 50 and 75. You can see right here. It's this Fibonacci I'm looking at right here. Boom. We see push out, enter on this candlestick right here. Stop loss right there. TP up here. You would have hit that TP. We see another Fibonacci right here. Price pulls up, pulls back down. 50, 75. Could have entered here amidst this candlestick. Probably not the best of entries. Could have had the same TP as up here, or just had your TP here. Or just entered off of this one. Pretty sniper entry. I wouldn't have entered here. I don't think I would have entered amidst this candlestick probably. Then another one. Price pushes up. Oh, where's this? Yeah, that's there. A lot of Fibonacci's. A lot of Fibonacci right here. Price pushes up, pulls back down, pushes up again. Could have entered right there. Stop loss right here. TP right up here or up here even to maximize risk reward. So we're not getting crazy risk reward trades, but the fact that price is already pushing up already makes these high probability trades. Then we see another one right here. Price pulls down. We see this candlestick right here. Confirmation. Enter. Stop loss right here. TP up here. Another play out. Price hits. We would have been 1, 2, 3, 4, 5. 5 back-to-back trades just off of Fibonacci, and price just a continuation market. Price is continuing right now. So these entries are very high probability because we know price is going to push up, pull back, and then continue pushing up. Because that's what gold tends to do in continuation markets. Yeah. All right, so yeah, that was basically it for gold. These just scaling in trades essentially, and I'm willing to take a lower risk to reward on these, as I'm confident that like when we see price push up after pulling back, it's typically not gonna come back and sweep liquidity of that same low. We see price higher low, higher low, higher low, higher low, and then after we lose volume after 11 o'clock, Then we start seeing price breaking structure moving down more. But during the actual session, we're not seeing that. During the session, we're looking for straight momentum. So essentially the same thing for silver. Um, All time highs. Swing is very bullish. Um, Internals bullish. Everything's bullish. Opening up, I also expected price to sweep liquidity, as said before. However, we see price strong push up. Then we start seeing pullbacks. We saw this pullback right here. Would have entered right here. Boom. GP would have been here. And again, we see price push up, pull back strongly. Silver, on the other hand, pulls back more strongly. Like these pullbacks are sharp, right? Then we see price TP right here. Boom. Price continues up. Strong pullback. It creates like one candlestick pullbacks. All right, TP. Boom. Oops. Um. Yeah, up here. Boom. Pretty small TP, but then we get another one right here. Strong pullback into right here. Boom. Would have been out of that trade. Would have let all of these trades run until they hit TP. Right. And this one wouldn't have hit TP. I probably would have exited once I saw price chopping up here. Probably would have exited like down here, if I'm being honest. Realistically. But we would have had 1, 2, 3, 4, 9 trades of pure profit from just continuations. Like today was genuinely like such a strong day for momentum. But I do expect a strong pullback to this area. I do expect price to pull back a lot because we've been overextended. Like, just let's see where we're at on the daily. Yeah, the daily's extremely bullish. Everything's bullish. We haven't had any significant pullback. So, like this. So, I'm expecting a strong, decent pullback as we're seeing it now. We're seeing a strong pullback about to occur. Probably to down here. Same with gold. I do expect a decently strong pullback to at least this area down here to just create some sort of structure, you know. Then could re-enter, boom, and yeah, basically it.